Hello friends. Hi, how are you doing all? I hope you're all doing good. So we had some 10 MCQ questions, 20 MCQ questions and 10 new case-based scenarios from CA Final Audit. So let's go through the first question. The 31st case study from CA Final Audit MCQs and case-based scenarios booklet. Okay. So the 31st case study is Vasant and Company is the auditor of UV Limited, a life insurance company and a public sector undertaking. The following are the events during the course of audit. In addition to the statutory audit, the management of the company asked the auditor to certify the investment risk management system and process of the insurance company. The auditor, during the course of verification, finds that an amount has been refunded to one of the insured client due to free lock cancellation. The policy document has been returned by the insured within 15 days from the date the insured received it. The insurance company has retained the medical charges incurred by it and a proportionate premium, risk premium, and refunded the balance premium amount. The insurance company is also involved in reinsurance business and necessary provision of reinsurance premium has been made in the books of accounts. The insurance company is into a reinsurance whereby their contract relates to a particular risk and is expressed in a reinsurance policy. Each transaction is negotiated individually on each part, and each party has a free choice, that is for the insurance company to offer and the reinsurer to accept. Meanwhile, a change has been raised against the auditor for a false statement in the prospectus. A party has relied on the statement and invested in the insurance company and has faced some damages due to growing losses of the insurance company. The auditor claims that his assistant, who is not a chartered accountant, had verified the contents of the prospectus. In view of the above facts, answer the following questions by choosing the correct answer. So here, after going through this case study, we came to know that there are mainly 4 issues, right? One is uh, certifying the investment risk management system and process of insurance company. The other is relating to free lock cancellation, and the next is the type of reinsurance that the company is entering into, and a false statement in the prospectus. So 4 key issues. Let's go through the first question and see which particular point it is discussing about. 31.1, can the auditor accept the assignment of investment risk management system and process audit? Answered by choosing the correct answer. So before going through the options, let's think. See, Vasant and Company is the auditor of a UV Limited, means he is the statutory auditor. So even while doing statutory auditor, can he certify this? The answer is no. For this, we'll quickly go through the screenshot of your CA final audit study material. Just give me a second. So here you go. So 4.4, it is there in your study material. So wherein it states, let's go through the second point, second line of this paragraph. Advise that the chartered accountant's firm, which is not a statutory or internal or concurrent audit of the concerned insurance, shall certify the investment risk management system and process are in place. So a statutory auditor cannot certify this. But here, Vasant and Company did this. So what we'll do is, no. As per the IRDAI circular, a chartered accountant, which is not a statutory auditor of the concerned insurer, shall certify the investment management systems and processes are in place. So option A is the correct answer. So we are referring to IRDAI rules. So section 144 of Companies Act is not relevant over here. And moreover, option C and D is speaking about what the statutory auditor has done is correct, but which is wrong. So from A and B, we can choose option A because this particular provision is there in IRDAI circular. Okay. Let's move on to the next question. Which among the following is not a content of the management report that is required to be prepared as per Schedule A of IRDA? So what do you think? So for this, we'll quickly go through the contents which are to be there in our management report. So we have somewhere around 14 statements, 14 points which are to be discussed. So all these points were there. I'll quickly go through it. Confirming regarding the continued validity of the registration granted by authority. Certification that all dues payable to the statutory authorities have been duly paid. Confirmation to the effect that the shareholding pattern and any transfer of shares during the year are in accordance with the statutory or regulatory requirements. Declaration that the management has not directly or indirectly invested outside in India the funds of the holders of policies issued in India. And confirmation that the required solvency margins has been maintained. Certification to the effect that all values of assets have been reviewed on the date of balance sheet, and that insurer believes that the assets set forth in the balance sheets are shown in the aggregated amounts not exceeding their realizable or market value under the respective headings of assets. Certification to the effect that no part of life insurance fund has been directly or indirectly applied in contravention to the provisions of Insurance Act relating to the application and investments of insurance funds. Disclosure with regards to the overall risk exposure strategy adopted to mitigate the same. Operations in countries, if any, with a separate statement giving the management estimate of country risk and exposure risk and the hedging strategy adopted. Aging of claims, indicating the trends in average claim settlement time during the preceding 5 years. Certification to the effect that as to how valuation of investment has been carried out. Review of asset quality and performance of investment in terms of portfolios. Responsibility statement indicating therein that in the preparation of financial statement, the applicable accounting standards, principles and policies have been followed along with proper explanations given to the material departures, if any. Management adopted accounting policies and applied them consistently, made significant judgments to give a true and fair view. Management has to take proper and sufficient care for maintaining of the adequate accounting records. Management has prepared the financial statements on going concern. Management has ensured that the internal audit system commensurate with the size and the nature of the business. And a schedule of payments which have been made to individuals, firms, companies and organizations in which directors of the insurer are interested. So I have gone through all these 14 points just for your memory recall that you have already done. Okay, so from this I can identify that option B, certification that all dues payable to a statutory authorities has been fully paid. So option B is there, statutory authorities dues payable to statutory authorities is there. Continued validity of registration granted by the authority, option A is also there. Aging of claims is also there. So option D, certification of a party-wise list of quantum of reinsurance business, which is not a mandatory item as per the Schedule A of IRDA. So and hence the option is D. The correct option is option D. 31.3. The auditor has verified the amount refunded under free law cancellation. Is the procedure followed by the company correct? Choose the correct reasoning. So what this company has done, it has deducted the medical expenses, right? So see, the point number B, the insurance company has retained medical charges incurred by it and a proportionate risk premium and refunded the balance premium amount. So for this, let's go through the free lock cancellation policy. Yeah, here you go. Free lock cancellation policy wherein it states, so let's quickly go through third line from the end. So when he shall be entitled to refund the premium amount subject to a deduction of a proportionate risk premium for a period on cover and expenses incurred by the insurer on medical examination of proposer and the stamp duty charges. So under free law cancellation, it can retain and hence the company has done a valid thing. I mean, it is correct. Whatever it has done is correct. So we'll go through each and every option. What it is saying, yes, whatever the company has done is correct. Yeah, we are in agreement with that. The amount is refunded correctly. However, the medical expenses incurred cannot be retained by the insurer, which is not correct, right? The insurer has right to retain the medical expenses incurred along with the stamp duty charges that the insured has incurred, right? So option A is wrong. Option B is saying the company has done wrong, which is not the correct answer. And option C says, yes, the procedure followed by the company of refunding the amount after retaining medical expenses and proportionate risk premium is in order. Yes, this is the correct option. Option D is anyways no, because here the question contains two parts. See, is the procedure followed by the company correct? The answer to this question is yes. So as and when you answer this question, option B and option D will go out of scope. So you need to choose from option A and option C. Option A says medical expenses cannot be retained. However, as for free lock cancellation, we can retain. So option A is also wrong. The final option left for us is option C, which is the correct option. And then 31.4, what kind of reinsurance business is the insurance company into? It is a facultative reinsurance. I'll quickly give you an overview. See, let's go through this, whatever is highlighted, right? Free choice. Each party to the transaction has a free choice. That is the ceding company to offer and the reinsurer to accept. Therefore, it's a facultative reinsurance. If you have gone through the definitions of each and everything, you can easily identify this. Just for the sake you identify it, I just highlighted that free lock part. Therefore, option A is the correct option. 31.5, the auditor cannot hold the assistant responsible for the mismanagement occurred solely because he has verified the same. Which among the following reasons substantiates the auditor's liability the best? So just because you have delegated your work to your assistants, it doesn't mean that you are acting in good faith and you are acting good in due diligence. So auditor is held liable. So what he need to do is he need to personally supervise, he need to check before he confirm things. Since due to his negligence, because of this his negligence, the investor has suffered the loss. So option B, an auditor who doesn't personally supervise into the accounts but merely delegated it to his assistant, cannot said to be acting in good faith, acting with due skill and care. So the auditor is held responsible. So option B is the correct option. We'll go through the other options as well. Option A says the auditor should not delegate prospectus verification to assistants and he should directly verify the same and satisfy himself that the statements made thereunder. It's okay even if you delegate your work, but it's your responsibility to supervise it. However, option A is saying you should not delegate, which is not correct. And then option C says, as per Council General guidelines, any work that may give rise to civil and criminal liability should be delegated only to qualified assistants. I'm not sure from where this particular thing came into picture. It's a general understanding that even if you are delegating your work to your assistants, you need to, even if those assistants were a qualified assistants, auditor has a responsibility to supervise and he need to ensure that whatever has been stated is correct before he signs it, right? And option D says none of the above. Recent case law states that an auditor can escape from personal liability owing to misconduct of assistants if he has exercised due skill and care, which is not the correct answer, right? So even if he proves that it is with that is the fault of his assistants, he is signing, he is the one who is signing it, so he need to exercise due care and skills, due skills and care, so that everything goes well. Since here auditor neglected this, he is held liable and he cannot escape from his liability. And next question, oh sorry, with this we have completed case study number 31. Hope you got everything clear. Like previously, we'll go through the study material, we'll refer it to the study material wherever possible, but in cases where there are simple questions which we can easily identify the answer, we'll simply go through it, like the question number 31.5, the last question, which is a general understanding. If being an SCA final education background, I hope this is a minimum knowledge that we have. So that's where I haven't referred this back to your study material. Okay. We'll connect again with the case study number 32. Thank you for watching. Please do share, like and subscribe. Thank you.